Euro JPY trade that we took on Thursday, the 6th of February 2025. Okay, this was a really clean example of the market maker sell model in play, and also internal to external range, coupled with our 1, 2, 3 or CRT model. Okay, this is an A+ setup. So I'm starting off on the 1 hour. It's going to be a top down from the 4 hour, but I'm going to start here just to show you what we were seeing and why. Okay, so here we have the candle. The previous candle's high was swept, so we closed below previous hour's high. Okay, so we sweep this candle's high inside a bearish FVG, just above the Asia high. Okay, so we've taken Asia high, which is the liquidity, tagged into a bearish FVG, and also you got an order block here. But don't worry about that, it's too far away. I don't really use it. I just wanted to point it out. So we got bearish FVG, 1 hour FVG. You've got the previous candle's highs swept in London, respect this FVG, and then close back in the range. Okay, really cleanly close back in the range. Now, we somewhat create relative equal lows here. Did kind of sweep it, but it's not too much of a big deal as we had a bearish bias. And the reason for that is what I'm going to explain now. So you go to the 4 hour, and this is where you really start to see the magic. Okay, this is perfect prime example, internal to external range. You have this internal range just here. Okay, super clean. Boom, price tags into that 4 hour FVG. We was up here during London first hour. Now this is what I keep saying, guys, about the 4 hour candle just being the main candle. This is so important. This is the first hour of London, but as we know, the first hour of the 4 hour is this candle. So what did we do? We opened on the first hour of the 4 hour candle. This is so easy. It's clockwork. It happens every single day on one pair or another. It's unbelievable. So we got new candle open, okay? Price opens, it creates a high. Open, high. We're looking for a bearish trade anyways because we're inside a 1 hour FVG. We're inside a 4 hour FVG. So we've got new candle open, price runs higher, and we're just looking for distribution to the downside. What do you target? You target the external range liquidity. It is super easy. It's so easy that children could do it. It's very simple. If you just wait for this to happen, it happens every single day on one pair or another. And that's a fact. Whether or not you catch it, well, that's a different story, but it happens, okay? So now I'm going to go and show you where you could have caught it, what you could have done, and how you could have caught it. I'll show exactly what I did and probably what I should have done differently. But just super easy, okay? So open, high, low, and we're probably going to close, okay? Because there's only 10 minutes more before news. But let's go down now to the 5-minute time frame, okay? So this is the trade that we was in. So I'm going to show my actual entry in the trade that we ran. Okay, you can see price hovering now around the external range. So here, obviously, we have up until this point a bit of consolidation. And then at the end of 2 a.m. New York, we have a bit of a run down, leave an FVG, an order block, price tags in just before the new candle's hour, okay? Now, you could take this, but I tend not to take the last 5, 10, 15 minutes of a candle. Now, the reason you could have took this one, okay, later on in the session today, I'm going to explain why this one was more of a valid candle you could have taken, okay? So, obviously, this is the 1 hour to the right here, okay? So, the reason you could have took this here at 250 is because this is where we were sitting, okay? That for this trade to be invalid, price would have needed to have run all the way back up above this high, okay? Because then it would have closed above and the trade would have been invalid. So the likelihood that this 5-minute candle moves from its opening price, so that would be, let's have a look. So from its opening price, it would have had to have ran nearly 30 pips just to make it invalid. So this could have been entered, okay? Me, I'm a little bit more cautious with it, so I didn't actually take that, and I'd just come off the back of a loss in another trade of a different pair. So I waited, and once I see this confirmation to the downside, I entered here, okay? I entered actually where this was a bit lower, but spreads and other things took me back up to this level. Okay, so this is where I entered. Now, you could have moved your stops down to here. Realistically, if this swing point gets ran, then this is getting taken as well. Now, what would that have meant for you? It meant you would have been just a little bit closer to 2R. You might even have got there if your spreads were good and a few other things, but ideally, I'd like to put it above the London high that gets created if I'm trading bearish, or the London low if I'm trading bullish. Okay, so if there was no news at 12, I would have still been holding this trade. But with that in mind, this is what you could have took. Okay, so this is a 5-minute entry. Now, if we make that only visible on the 5-minute, that'll be there. Now, if we go to the 15-minute, you can also see that you would have had a decent entry off of here also. Okay, so you could have took this entry here off this FVG. Okay, just like that. You could put the stops just here, like I said. Would you have got 1 to 2R? You'd have got way over a 1 to 2R. You could have hit at least 1 to 2.5R. So it would have been about 3% profit for you on the day. You'd have easily hit a 2R trade, which is what I target all the time. So that's that. On the 15-minute, that would have been really, really clean. The 3-minute, you would have also got a really clean setup. Okay. Now, this is what I mean about why you wouldn't have took it. The reason you wouldn't have took this candle here, because look at the time, 2:36 now, and look at where we were when this opened, okay? So when price ran up, we did respect this 3-minute FVG, but we were sitting really quite close. If you look to the right of this line where I'm sitting now, how close we are to this high on the 1 hour. So you wouldn't have took this. With that being said, this is the same candle as the 5-minute, okay? So you would have still got the same sort of trade. You could have took this one. It's exactly the same. You could have put your stops here. And I'm assuming this is going to be similar to the 5-minute chart. But you would have also still got a 1 to 2.5R, okay? So going down time frames, you could have got different types of entries. Unfortunately for me, I did take the 5-minute. And I did close at literally 1.5% profit. With that in mind, I took a couple losses. Well, one loss today, which closed me for 1%. And then I was in another trade that closed for about half a percent. So I ended up at break even today. But this is a really, really, really clean market maker sell model, coupled with the internal range to external range, coupled with the 1, 2, 3 or CRT method or strategy that people like to use nowadays. But for me, this is just all about the candles, closure and candles, wicks. That's all I really care about. You can name it what you want. You can call it what you want. It's something that I was doing quite a while ago without even knowing what it was. It was only down to someone that I'm quite close with that trades who actually made up the model, the 1, 2, 3, who pointed it out. And I was like, oh, wow, it's actually really powerful. And then I went into more detail, used some of his details to actually look a bit deeper at what I was doing and realized actually what I know already, coupled with what his input onto it, made it really powerful and actually made me realize that this sort of pattern, if you want to call it a pattern, where you sweep a candle's high or low and close back within, is quite powerful in terms of the direction of the trade. Then what I tend to do, like I say, I like to have a 1 hour FEG and do that sort of pattern inside of the FEG. Or if to make it really A plus, this is why this is an A plus setup, I will have it where it's got a 4-hour wick inside a 4-hour FEG coupled with that 1 hour, and that becomes A plus for me. But really, really, really clean setup. As you can see, price is literally done internal to external range. And yeah, I'm really happy with how this trade played out, and I hope that everybody caught it.